Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, Vancouver City Council just changed their zoning bylaws, so now single-family residences now can automatically be turned into duplexes. Is that going to make housing more affordable in Vancouver?
Is it going to make housing more affordable in Vancouver? Wow. It's, you know, Jim, in the history of Canadian housing, I do not believe, this is serious, I do not believe any politicians, any group of politicians have ever taken an action like this at the time that they're leaving office that is going to radically change the home ownership rate, the tenancy rate, the housing stock, the affordability, the cost of homes, the cost of renovations, the property tax assessments, the income tax assessments, tax payable. It is just a staggering thing to watch happen, Jim, when you're looking at the market the way that we look at it. I don't know, Jim. I really believe if anybody believes that a politicians are in somebody's back pocket, this would be the best example of that ever to happen. What your listeners can understand is that all of the foreign owners of single detached homes in the Vancouver city of Vancouver, they have been given the dream investing situation that they've always coveted. Now, because the investors normally are from the Asian countries, these investors who now own Vancouver single detached homes, when they purchased those properties, Jim, they were planning on holding on to them for a very long period of time, because that's how the Chinese investor invests when it comes to real estate. They simply buy the property. What they're really buying, Jim, was the land. What the home does is the home allows them, if they so choose, to generate some income from the land while they continue to hold it. Now, look at the perfect storm that you have in Vancouver, Jim. You have a place where you can invest $1 million, meaning purchase $1 million home, and pay $2,500 a year in property tax or holding tax. That's the low price that you pay to hold real estate in Vancouver, around $2,500 for every $1 million that you're investing. Now, what the government has just said is, for a mere $2,500 a year, plus whatever investment loss you may have for that $1 million. In other words, you may have invested it somewhere else. The opportunity cost, whatever we want to discuss. The government is now saying that in the future, that single detached land which you purchased, we're going to allow you to build 2 homes on that property. We are not going to put any restrictions. We are not going to limit the profits that you can make. We're not going to make any demands on you at all. We are simply going to say that one single detached home land building envelope that you purchased is now 2. If you look at the legislation, Jim, odds are you're also going to get two laneway houses over time once that happens. What these people have done, and I'm going to say Robertson in particular, he has given foreign owners, the people who caused a lot of the problems to take place in your marketplace, a financial windfall that is the dream upon dream of a real estate investor. They purchased their properties, the single detached homes, and they removed that housing stock from local hands. That is now an investment. That is now an investment in land, a land investment. That's what the foreign owners have done. As your housing market is correcting, as the value of that land is dropping, Robertson and his crew of cronies, or whoever they were who came up with this ridiculous decision, handed over an extra building envelope on the same investment. So even as the housing market is correcting, they are now going to be able to recoup their costs and gain a higher profit margin off of that investment over time. The politicians put no restrictions on Jim. If they had talked to us, we would have said, look, yes, we believe that you should double the number of homes on a single detached lot. Yes, that is great policy. But you need to do that holding the profit margins in check. In other words, soon as this happens, the assessed value of every single detached property in Vancouver should increase by about 60%. Because now you're holding an asset where the land value, because of the zoning change, is going to increase. This should be a benefit for your condo owners, by the way, because your condo owners over time should get even more of a discount on the property taxes, on top of the already Canadian-wide lowest property taxes paid by any homeowner in Canada is only in the city of Vancouver. Ridiculously low is how low it is on your real estate investment. So the consequence is the old retired, the boomers, the ones who were complaining last year about property taxes going up, well, now their property taxes are really going to go up because their land value should be increased by about 60% by this time next year. If you look at on the BC eValue assessments, Jim, what's a great thing about the eValue site is it gives you the price, the assessment, and then they give you the land value and the house value. Okay, well, the house value in a lot of those properties that the foreign owners purchased and now own, 90% of the value is in the land. And it's right on the eValue website. So this is not something that wasn't known to these politicians before they made this decision, Jim. This was already there. So everybody's got to ask, what were these people thinking, turning over this amount of investment opportunity to the foreign owners who removed Vancouver single detached homes from the housing stock that is no longer accessible to Vancouverites, the people who live and work there, which caused a trickle-down effect on the rest of the market, which allowed the local real estate boards and all the real estate stakeholders to make these outrageous claims about housing prices changing and about how Vancouver is going to defy every worldwide housing market and prices are going to keep going up. They've just handed them this gift. This gift may take 10 to 15 years to bear fruit. But the foreign owner is the one who's comfortable holding the property for 10 to 15 years. Look, Jim, in our perspective, we believe they should have doubled the building envelopes on every single detached location in Vancouver. That is true. What we believe is they should have held the profit margins. In other words, the amount of home that they're going to permit on each building envelope to a certain margin. In other words, if the building envelope is worth $1 million, we'll allow you to build a $1 million, we will give you permits to build a $1 million home. We will not permit you for something higher. If the assessed value of the land is $500,000 because property values are dropping, once they reach to $500,000, you could still maintain that 50%. You can have a $1 million property, $500,000 to build the property, the building. We will permit you the building permit to build the building an equal amount to what the land is assessed at in that year. That would add housing stock. And then we would also say, Jim, 40 years from now, you should already be planning for this in Vancouver. We are going to allow another a doubling of building envelopes on single detached homes. So that means for the next 40 years, everybody can make their plans. They can make their financial decisions. They can make every single decision that needs to take place to house people in Vancouver. Because 40 years from now, we are going to now allow another doubling of those building envelopes. So the home that's built today is probably going to be torn down 40 years from now. But guess what? That is normally how builders and renovators handle things anyways. There's about a 40-year window, and at that time, it's usually profitable to tear down the existing building and build a new one. So what they've done is they've walked out of the door from being elected to serve the public is to slap the public in the face. We are already working now on plans with some of our members in Vancouver to capitalize on this change. We have to build in timelines to make it work. But we know long term, this is a tremendous thing for all. Now, we don't deal with foreign owners, but this is a tremendous thing for those foreign owners who bought. Where is someone speaking up for the regular Vancouver resident? Where are these politicians? Like, what is the logic that they would have? I don't know. It is the worst single decision made in the history of housing, certainly in Canada, probably in North America. It could have been resolved simply by limiting the permitting of a building to some ratio on the land value going forward. They didn't do that. So what they're going to do over the long term is it's going to make affordability lower and lower and lower. And the dream of the regular family owning a single detached home in Vancouver, or even a townhome from that matter, Jim, 20 years from now is probably going to be impossible.
We'll have more with Ross Kay right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Ross Kay. Ross, we're getting an uptick on questions related to foreclosures and wondering if you're seeing any changes on that front in the near future.
Yeah, that's probably an indication, Jim, from some of the articles and that have been out there in the press and some of the commentary that has been happening about foreclosures. I think from our perspective, the magnitude of misunderstanding about foreclosures, foreclosure rules, the way the process works in Canada, how Canadians interact with their homes. Somehow, Jim, over the last 15 to 20 years, that has been forgotten by the entire industry. In other words, what we're hearing is debt debt counselors come out and tell people, well, when your house is foreclosed on, the bank can come after you for any shortfall, but you can still file a consumer proposal or file for bankruptcy. As if this is some big new thing, or as if people don't know this. This is normal. What they don't finish off with, though, is that Canadians don't want to go bankrupt. And the banks and CMHC, prior to a home reaching a point where it's negative equity, they've already moved to get that property sold if you're delinquent on your mortgage payment. So that's really what the process is in Canada. There's this new myth about jingle mail, where you mail in your keys like you can in Alberta. Alberta is the one province where that's possible. But in the rest of Canada, that's not the case. They're making claims now that, you can. There still is jingle mail because you can file bankruptcy or file a consumer proposal, and that will prevent the bank from coming after you for any shortfall. Well, what I'm telling you is please give me a list of people in the history of Canada where that has happened. It may be a theory, but it has never happened. It didn't happen through the 1990s. The reason I know it didn't happen is because I sold foreclosure properties. When they had foreclosures that needed to sell in Burlington, the banks would call us months of it in advance, and we would try to extract that family from that situation. I can tell you, in all of the cases that we handled over the 90s, we extracted everyone. There was not a single family left owing money after it was done. So the foreclosures that you are not going to see foreclosures. There are many reasons why. You are also, when you do see a foreclosure with a bank, you are not even probably going to know it, because court decisions have taken place in Canada that says on the listing agreement, the bank as owner cannot be listed. On the listing agreement, the property cannot be checked off as a foreclosure, as it is in the United States. There are court cases where these things have already been decided because the banks, prior to the court cases, were taking advantage of consumers by just selling the properties and then saying that they're going to go after the people for any shortfall, which allowed the property to sell for the cheapest price possible for the bank to break even. That's really what was going on. There was a court case that stopped that. That court case set the precedent for all other court cases. So in terms of foreclosures are never, I will tell your listeners, the foreclosure myth in Canada is directed at home buying. You do not get a better deal buying a foreclosure property than you do buying a property from a distressed home seller. The regular Canadian who's in financial distress, who is selling their home, not in foreclosure, takes a way, way bigger loss than what the bank is looking to sell the property for in a foreclosure. The only opportunity where you would get a deal on a foreclosure would be is if a builder, a speculator, at the end of the trading cycle, which we've passed now, had purchased at peak price, which means spring of 2016 in Vancouver, spring of 2017 in the Greater Toronto area. And then over the next year and a half, 2 years, the property value is dropped, and they can no longer flip that property, or they no longer are going to be able to finance the renovations to the existing home, or the tear down of the existing home and the rebuilding of a brand new house on the lot that they could make a profit on. Those situations will come up, but they will be few and far between. They also are only for very, very specific home buyers, Jim. In other words, if you're buying a house that's falling apart, you're obviously not going to be able to move your family in. You're going to have to renovate that house and carry two properties, whether it's rental or owning two, while that renovation goes on. So the cost of that property escalates. There is not the financial benefit to take advantage of foreclosures in Canada. So Are foreclosures increasing right now? No. Are you likely to see foreclosures increasing? No. The existing homeowners, with the help of CMHC and their bank, will sell those properties prior to them ever reaching foreclosure. You are never going to know about it because Canadian law prevents the bank's name from going on title and telling everybody that this is a bank foreclosure property. In Canada, that is illegal. So you're not going to see it happen.
We'll have more with Ross Kay right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, today the BC Rental Task Force recommended holding rate increases at inflation, although landlords could apply for a higher rent if they had added expenses or maintenance. Coming up next year, renters will have to pay 4.5% more plus whatever the landlord can appeal. What do these rulings mean for tenants and landlords?
Well, what it means is if they implement your rent can only increase with inflation, plus the landlord can go to a review tribunal and say, look, I need to renovate my kitchen. It's going to cost me an extra $30,000. That means that I need to recover that money, so I need an extra $100 a month to cover that. That renovation work to get it paid for over the next 15 years. And the review tribunal would say yes. That is a win-win for both tenants and landlords. I understand landlords are looking to maximize profit in 2018. The psyche of a landlord is not the same today, Jim, that it has been up until around 2010. A rental property is a fantastic investment. It is an investment where you purchase it and the tenant moves in, and the tenant over 25 years pays off your mortgage for you. Now, everybody would ask, well, why would a tenant agree to do that? Well, the reason the tenant agrees to do it is because generally the tenant is leasing a property that the landlord purchased 7, 10, 15 years ago. So the landlord is looking at that old price, and the tenant is helping them pay off that old mortgage. What you had recently in both the GTA and in Vancouver is that there's these real estate investing networks out there who are selling their services, promoting what they're trying to sell membership fees for, that you're going to get rich quick off of rental real estate by continuing to increase the rent as the value of the property increases. Great real estate investing has never relied upon increasing rents with property values. It's built on purchasing the property at today's rate, allowing house price inflation to make the asset be worth more, allowing your tenants to pay off your mortgage at a high enough rental fee that you can keep the home in good repair for the tenants. And then 25, 30, 40 years from now, when you're going to retire, you can sell that rental property and remove it from the housing stock. You're removing from the rental stock. At that time, the house probably needs to be torn down and renovated anyways. Because, again, your population has increased, The size of your lot now is no longer needs to be 50 feet. Now it only needs to be maybe 25 feet. There's lots of reasons why. But it was an awesome relationship between tenants and landlords. Now, I'm not saying you don't have unreasonable tenants who, if there's a leaky tap, won't fix the leaky tap for you, but will call you to come and swap out a washer. I'm not saying that you don't have tenants who don't take care of the property and they need to be evicted. I'm not saying you don't have landlords that are greedy. And they believe, as I've watched in social media recently, they believe that rents haven't kept pace with house prices. Well, of course they haven't kept pace with house prices, and they should never be expected to do that. If that was the case, no one in Canada would rent a house. The reason why tenants rent houses is because they're taking advantage of the landlords purchasing the property years and years ago at a lower price. So the landlord can cover their mortgage and interest, maintenance, repairs, and renovations at a way lower cost than if someone went out and purchased the home today. So the landlord is being rewarded by holding the property, getting the mortgage paid off, maybe getting a small profit margin off it over time, and years later, decades later, selling the property at a higher value, cashing out. The tenant gets all the advantage during the entire 25, 30, 40 years that the landlord has held on to that property. What should not be allowed to happen is profiteering, where landlords take advantage of an understocked rental housing stock and they inflate the rental costs to a point where it's simply driven by supply and demand or peak pricing as you've had. That should never be allowed to happen.
Ross, what about rent evictions where people are told we're kicking you out of the apartment because we're going to spend 3 months to put in a new kitchen?
Okay, so that is a rent eviction. They are actually evicting the person. So this is profiteering. That is not where a landlord is going to renovate the kitchen so that the existing tenant has a beautiful new kitchen because the old one has worn itself out, which every single kitchen in Canada wears itself out. This is the biggest misunderstanding about home ownership, Jim. Most people who own a home that is they've owned it for over 25 years will replace the kitchen. It may be a perfectly good kitchen, maybe nothing wrong with the kitchen, but it's now outdated. It's now oak cupboards when maybe a white French provincial is in, or it's a white French provincial when oak is in. Maybe it's got granite marble countertops when Formica is in, or Formica when marble countertops are in. You renovate a kitchen, that's just the way that it happens. There is no need to kick out a tenant while you renovate the kitchen. You can give the tenant a discount on their rent. They will use another part of the property, another part of the house, the living room, the kitchen, or the living room or the dining room to eat in and cook in. Maybe they'll agree to use a barbecue for a couple of months while the renovation's going on in exchange for a rent discount. There is no need for rent evictions unless the house is falling apart. And then the people shouldn't have been allowed to rent it in the first place. That's the city's problem. Rent evictions, in my opinion, and with the decades of real estate housing data that we have, are profiteering. That's when a landlord is profiteering from the rental housing market. We're going to kick you out because we need to put in a new kitchen, and then we're not going to let you come back in because, well, first of all, where did you live for the 3 months? Oh, 3 months is you can wait 3 months? Okay, sorry, the renovation is going to take 6. That's profiteering. Should not be allowed to happen. No need for it to happen. No need at all. Someone needs to protect regular tenants. Just a rational approach to it, Jim. I'm not favoring the tenant or the landlord. I favor them both. A landlord can make there is no other investment like rental real estate if you handle it properly. There is nothing wrong with renting a house instead of owning. if you handle it properly. The problem is, in both cases, very seldom is it ever handled properly.
Ross, thank you so much for being on the show.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our YouTube channel is Talk Digital Network. Questions for Ross or any of our other guests can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.